Hello, everyone. Happy Unemployment Thursday. How's everyone doing today? Good morning, Mark. Good morning, Patrick. Good morning, Sterling. Thank you for putting in the jobless claims data and the earnings. Good morning, Jacob. What else do we have here? Good morning, Ted. Well, it's Larry Fink from BlackRock talking. Tesla's going to raise their prices in Canada. That's not going to work well. Good morning, McRangers. So, what do we have here? What do we have? Good morning, Royal Palms. If we take a look at American Airlines, I don't understand how the reaction is so negative. It was a gap down on it. So, the earnings wasn't that impressive. Yes, they beat, but it wasn't that impressive. And it's already been way priced in. You got to realize a lot of these things have run up massively, and earnings expectations have gone way down. So a beat isn't necessarily a strong thing. So, good morning, John. Good morning, Heinrich. Good morning, Richard. Good morning, hello, Charles. Good morning, Daniel. Good morning, Eric. A whole crew's in here. And good morning, everybody hiding in the background. Thank you for being here. All right, let's get right to it. Jobless claims a little pop. Higher than previous, higher than consensus, coming in at 223 for initial. Continuing jobless claims coming in also higher, but close to 1900 again. So a pretty big jump in there. That's where we sit, but again, not enough to really disrupt the market. The market's already at cycle top, so I'm watching for a pause pullback period in the short term. We have the EIA numbers coming out, so I'm going to pay attention close to those from a crude perspective later today. So that's where we sit right now. And then tomorrow we have the big thing is going to be the Michigan consumer sentiment numbers and the S&P composite manufacturing and services numbers. But more important, the Michigan inflation expectations tomorrow. There's just not a lot of major data this week. Remember, we have the Fed meeting next Wednesday. So far, we're going to get pullback after a major run up in chips and comm services. We're getting a little pause there, with a little bounce in Apple. Again, for me, any bounce in Apple is looking for rollover opportunities. Semiconductors are also pulling back. You have GE that beat up 7%. What else do we have? We had some others in here. Union Pacific, which reported also up 4%. In terms of groups, energy, leading industrials, and healthcare. So this is more rotating into more of a take some profits on the recent things that have run up and rotate into a little bit more safety that's been lagging and take some profits in technology. For next week, we're still at a pretty much lock that there's going to be a pause for the next 3 meetings at least, and then possible cut in June. Fear and greed, right back, still technically in fear. Jumped to neutral, I thought, for a bit yesterday, but still hanging out here mainly because the stock price strength and breadth are really in the toilet. I mean, they bounced a little, but not enough to really make a huge difference. Schiller PE 38.37. So still, again, this market is really priced beyond perfection. What else do we have? Sterling put all those in the chat. If you want to look at anything specifically, we'll look at American Airlines, but CSX after the close, Texas Instruments. Again, not a lot this market moving. And then tomorrow morning, we have Verizon and American Express are the two biggies. All right. So, good morning, Anissa. So, what else do we have? Charles putting in Canada's retail sales core expected 0.1 coming in -7. Negative 0.7, I should say. So, all right. We are at cycle tops and overbought after the run-ups with the inauguration run-up. So, going to be keeping an eye right here. We got 4-hour little bottom of the rotation zone. I'm just going to watch. If we start breaking below the last 4-hour low at where is that? What was the exact price? 61.01. So you start breaking around 6,100. I'm going to watch for the slightly bigger pullback closer to 60.80. 60.80 is the first key area. I'll be actually watching. Let me take that back. I'm first watching right around yesterday's low, 60.80 to 60.87 for key support. Key support, that's going to be the area I'm watching. And then we still technically have a gap behind to the close of 60.84.25. So that's where I'm watching for very key support if we do pull back. On a rotation, if we do hold the rotation zone though, I will be watching for this to make a stronger topping pattern. So right after this morning, if it can't get above 61.23, I'll be focusing on the rollover. If it does, I'll be focusing on 61.31 and a potential double top pattern. Now, in the bigger scheme of things, am I watching for a major collapse? No. I'm watching for, because why? We still have weekly cycles running up, so daily and weekly cycles are not in sync. So I'm watching for more of a pause / slight pullback here. By the way, if we did get a bigger pullback, major support's coming in about 60.40 to 60.50, which would be a major support level right now. NASDAQ pulling back a little with some profit taking in tech. Same thing, watching the 4-hour rotation zone, which is at the bottom. We've pulled back into it. Major support in the NASDAQ's coming in about 21,785. Remember that, though. So into the short term on the open, I'll be watching for a little bounce play. If we can't get above the 22,004, just remember 22K. If we can't get above that, I'll be really watching for the next rollover play. If we do get above that, I'll be watching for a potential double top to form. Other than that, yesterday's low and Tuesday's high are very key. That area is very key. 21,783, 21,768. So that's the key area. If we do break below that support, then we have a gap fill potentially down to 21,709.50. But we don't have any strong pattern to trigger that yet as a magnet price. So Dow, after its major run, very overbought, cycles pinned to the top. Major support in the Dow is back at 43,800. Again, I'm going to be watching for at least a pause here. If we start dropping below 44,300, my key support level is 44,100. Pretty simple right there. Russell has not. Yesterday, Russell, we talked about that starting to roll over in cycles after hitting overbought. So key support I'm watching is coming in at 2285. And the Russell's the last thing on the bullish list for me. The VIX still holding 15. Little dip below that yesterday with the continued rally, but up a little. So unless we really start breaking below about 1450, I'm still going to be watching for the pause or consolidation. The DAX, again, very similar to the Dow, on a major run, getting to cycle tops and very overbought. But there is just this potential little mini rounded double here. So if you're watching the DAX, you really need it to start dropping below 21,332 on a closing basis to trigger the little slight pullback move. And that doesn't even take us potentially to the daily rotation zone. Rollover in the note futures. So it's going to be interesting. Do we make the do we have a potential inverse head and shoulders here, or does this pull back? I'm going to be watching this 108.04 area. And on the micro yield, you can see here, do we have a flat? Roughly, this is going to be a modified flat neckline, head and shoulders. We're breaking through here, though. So my next key thing going into especially the Fed meeting next week, if we break through this 4.65 area, I'm watching 4.67, then very key is 4.7 roughly. That's what I'm keeping an eye on there. Because if it starts getting above 4.7, we're not going to have an head and shoulders potential top in the yields on the 10-year. Dollar index. Again, let me jump back to the 10-year. I forgot to mention something. Even though this is not a percent beat buy, I am paying attention to where we close in relation to yesterday's high if we do pause on here. So I want to see it close above yesterday's high for any short-term moves, because this is not a strong bottoming pattern yet. It's a minor bottoming pattern with cycles turning up. And this is the opposite of stocks. We have the cycles turning down. That's why we don't have cycles in sync. We've now tapped out the top of the rotation zone, but we don't have a strong bottoming pattern yet. Now, dollar index also, we tried to rally a bit. This would be a percent B buy if we close above yesterday's high. For me, that does not mean, if you don't understand what a percent B buy is, you have no purpose even trying to do a setup with it. But again, weekly cycles headed down on the dollar. Daily cycles trying to head up. So this might just be a minor bounce. I'm going to be watching if we don't close above today's high. Even if we do, I'm going to be watching for a stronger potential bottoming pattern. So this has to be very nimble, and it has to get above 108.20 for me to get traction. Crude. This is a sloppy double bottom here. Very sloppy double bottom there, but I will keep an eye on that going into the EIA numbers. That's the only little thing that's potentially bullish, but that's nowhere near triggering. Nowhere near triggering. If we pull back more, I'm watching closer to the bottom of the daily rotation zone, back to about 74. Natty gas. It is still holding the rotation zone, so confirming the double top, but not triggering it. Now, natty gas is interesting because it's rotating back up. We had a percent B buy yesterday, so it's going to be interesting to see if this follows through, or if it comes back down. This could be a really nice trade if it does trigger then the double top without invalidating it first, because the rotation zone would be out of the way. Gold, also watching for a pause now with this coming into the daily rotation zone, but my major level of support is about 27. 15, 27, 20. That's where I'll be watching for key support, especially with daily cycles at the top. There is no significant sell pattern yet. It did break short-term key support, very short-term key support, so that's why I'm paying attention to the next major support level. Next major was at 27.15, 27.17, 27.20. Minor is this 27.30. This would not be anything I'd be looking to short. I'm watching for a pullback play, then the rotation back up, especially since we've closed above the 62.5. We closed above the 75, so we still have a magnet price of 27.94 in the short term, then a potential breakout to new highs. Well, a lot of people now are anticipating this as the only thing that would give a lot of volatility to the yen, and we'll get to the yen in a second right now, is if they did a double hike. 50 basis points instead of 25. 25 is expected. In terms of the yen, the little mini double bottom is confirmed but did not trigger. So, and we are going into the potential rate hike there. All right, so that's coming. So the only thing that I think would shock the market is if they did a double hike. Euro. Be interesting here to see if we get a inverse head and shoulders here, an inverse modified flat neckline head and shoulders, and then a continued bigger dollar pullback. And this would be the shoulder, this would be the head, and this would be another. This would be the shoulder. But here's the neckline, so that's the only thing I'll be keeping an eye out in the short term. And it's not a super strong pattern. But then I'd be watching for a continued little bigger pause pullback in the dollar. Spiders, key support is coming in right about 604.70, the prior 87.5 level. And then if it does roll over and we get a bigger consolidation, there's a gap fill back to 603.05. So that's where, and over the next few days, remember we got cycles at the top and overbought. If we do break out to new highs, 613.30 is the next target. Qs coming up just shy of the 87.5. The support is roughly yesterday's gap open. 529.57. We're trading right below that now. So unless this bounces a bit into the open, that's going to become resistance. And then my next support I'm watching is the high for Monday the 6th, 527.92. And then it would be, if that starts breaking down to the gap fill at 524.80. Was this, Mike? When you see a big breakout like what happened in IBKR yesterday, are the probabilities higher that it will retest the breakout zone or that it will have a sideways correction? When you have a big breakout like this, it's more likely that you get a sideways correction. It actually, if it filled this whole gap, would be more negative in the short term. It means it could not sustain the breakout. So I'd be watching for more of a sideways correction, and the first thing I'd be watching is some of these shorter rotation zones to catch up. Okay? You really, when I watch for these, I'm really focused on between the gap open price and the low of that bar to hold as the rotation zones catch up. All right? So there you go, Sterling. Little pullback in Bitcoin, but no major pattern triggered, so nothing to watch here. Really, it's trading against a minor support level at 102. If it starts though dropping below 99,650, then I'll start watching for a possible retest of this low area of 91. What else? Tesla still in this channeling double. Nothing's been invalidated, but can't get any traction on it. Can't get any traction in the short term. NVIDIA, by the way, has rotated back up. So the potential double top that never triggered is off the table. So there's no major topping bearish pattern just yet. The only thing for me that now would be warrant, the first warning sign would be if we start breaking below about 129 again on a closing basis. And then what would be anything kiss it goodbye trade is back below 114. Other than that, it's still trying to hold up and consolidate near the recent highs. EWJ weekly rotation. You have it off the weekly 200? Huh. There's nothing. I don't have it off the weekly 200. But, and I don't know, this is not something I'd be overly bullish on in the short term. It really, to me, has to form a nice bottoming pattern still down here. This is just, it's just sitting in consolidation. That would not be something I'm super interested in. SoFi. Why did that go? There we go. SoFi against the longer term, the key longer term harmonic right there. So this would be one. Now this would be one I'd have no, remember Sterling, we talked about IBKR with the pullback. This would be one I have no problem with the pullback. I'd have no problem with the pullback back in this key support with the rising rotation zone because it's a minor gap up. So I'd be watching between about 1650 and about 1690 for a potential pullback trade and that holding with the rotation zone. This would be one I'd be watching for the pullback play versus IBK bar. I'd be watching for the more of the consolidation play. Hope that makes sense. So thank you for putting, thanks for putting that in, Jake. There's not much else to talk about. So I'm not going to take up anybody's time. By the way, Apple, this is very, very sloppy, triggering, little minor 1 hour rotation zone play. So I am keeping an eye on that. It's against the rotation zone. So this is just a minor bottoming pattern with some cycles turning up, coming out of oversold condition with a little divergence here. So I'm watching for this to potentially be a bounce play only in Apple. All right, nothing like, oh, this is a long-term bottom that's got to be bought. Remember, you have the daily rotation zone against it. You have the weekly rotation zone that's hooking over now. So, oh yeah, AAL. Thank you. Thank you for reminding me. So gap down after earnings. I mean, here, see, look at the revenue number. Reported prior was 13.65 billion. And this one 13.66 billion. Look at the run up, look at what this has, and it's not. I mean, it's only a minor, and look at their projection was 13.43. So yeah, they beat, but they barely beat what they reported last quarter. Now the earnings were better on EPS, earnings per share, but it's not an incredibly strong report after running up so much. And look at their P to E ratio. I mean, you got to take some stuff into account. It's trading 50, it was trading close to 58 going into earnings. And the revenue is not growing that fast. So it's got to come from cost reduction measures, which they did talk about. But this would be one that I would not be personally chasing higher at this point. I'd be watching to see how it reacts closer to the 17 to 1730 area. And then seeing if we get a little blip up there. Again, very overbought, very overextended. Been on a tear since August. So I would, again, that pullback does not bother me. I'd be watching for a bigger pullback and then consolidation pattern more so. That's why I'm not keen on a lot of these stocks that are barely beating, or that, yeah, they might beat, but they still might not have done great compared to last quarter because expectations are so the people brought in their expectations so much. But in the short term, if you want to watch something, again, the bottom of the daily rotation zone, it can spike below it, but watch how it closes in relation to that 21 EMA. Because you start closing below it, that would be the first close below it since it really broke out in October. See where it broke above these key things, and you got the rotation zone starting to support it, and every pullback in there were buying opportunities. Even this one spiking below but closing in it. So really watch if it starts losing this 21 EMA if you're coming from the bullish case on AAL. All right. With that, again, nothing's really changed. I'm just watching for more of a consolidation, especially going into the sentiment numbers tomorrow. But that we don't have a strong topping pattern yet. There's no strong topping pattern. So take that for what it's worth. We've just got overbought on a short-term basis with cycles at the top. But that doesn't mean it has to collapse because you still have weekly cycles moving up. Next week is going to be critical. Starting to get to the middle of next week, towards the middle to end of next week, that's when weeklies will be at the top probably. And that's where we could see it back. This could pull back and we could get top in the cycles again, which is where I'll start more aggressively looking to see if we have any more significant topping patterns. All right. I will talk to everyone tomorrow. Have a wonderful, wonderful trading day. Bye for now.